Have you ever felt like you're just gambling with your money in the crypto market, tossing a coin and hoping it lands on heads? I know that feeling. For years I struggled, buying when everyone was screaming to the moon, and then panic selling when the charts turned red. It was a stressful, emotional roller coaster that left my portfolio bleeding. I thought maybe I just wasn't cut out for it, that making serious money in crypto was reserved for some secret club of geniuses. But then, I discovered something that changed everything: the hidden language of the market. I realized crypto doesn't move randomly. It speaks in patterns, in cycles of fear and greed. It was like someone handed me a secret decoder ring. Suddenly, the chaos started to make sense. This isn't about some get-rich-quick scheme or a magic formula. This is about understanding the psychology that drives the entire market, a skill that separates the pros from the amateurs. And today, I'm going to share that with you. We're going to dive deep into the 4 phases of a crypto market cycle. By the end of this video, you'll be able to look at any chart and not just see numbers, but see a story unfolding. You'll know when to be cautious, when to be patient, and most importantly, when to make your move. This knowledge is the foundation upon which real, sustainable wealth is built in crypto. So, if you're ready to stop gambling and start investing with confidence, stick around. Let's decode this together. First up is the accumulation phase. Picture this. The market has just been through a brutal crash. Prices are at rock bottom, the news is all doom and gloom, and most people have given up, convinced crypto is dead. This is the quiet before the storm. It looks boring, but this is where the smartest investors, the whales, are silently at work. They're not making headlines. They're strategically buying up assets at bargain bin prices. This phase can last for months, even years. The price action is mostly flat, maybe with a few small bounces. It's a test of patience. The average person isn't interested because there's no exciting pump, no thrill of a quick profit. But this is where millionaires are made. They are accumulating, building their positions, while everyone else is looking the other way. Then, things start to shift. This is the markup phase, also known as the bull market. It starts subtly. The price begins to slowly grind upwards. Early adopters and informed investors start to notice. Positive news begins to trickle in. As the price breaks through previous resistance levels, the public starts to take notice. Media coverage explodes. Suddenly, your uncle is asking you about Bitcoin at the family dinner. This is when FOMO, the fear of missing out, kicks into high gear. Everyone wants a piece of the action. New, inexperienced investors flood the market, pushing prices to insane, parabolic highs. It feels like the party will never end. This is the most exciting and visible phase, but it's also the most dangerous if you don't know what comes next. And what comes next is the distribution phase. At the very peak of the bull run, when euphoria is at its absolute maximum, the smart money that bought during the accumulation phase starts to sell. They distribute their holdings to the frenzied crowd of new buyers who are convinced the price can only go up. Outwardly, everything still looks amazing. Prices might even chop around the top for a while, making new, slightly higher highs, fooling people into thinking there's more room to run. But underneath the surface, the tide is turning. The whales are cashing out, taking their massive profits off the table. This is the phase where the greatest transfer of wealth happens from the uninformed latecomers to the patient early investors. The party is secretly winding down, but the music is still playing loudly. Finally, we have the markdown phase, the dreaded bear market. The party's over. Once the big players have finished selling, the floor gives way. The price starts to fall, slowly at first, then rapidly. The same crowd that bought in at the top out of greed now starts to sell in a panic, trying to salvage what's left of their investment. This selling pressure causes a cascade of liquidations, pushing prices down even further, sometimes 80 to 90% from their peak. The news turns negative. Media declares crypto a scam, and the cycle of fear takes hold. This is the most emotionally painful phase. But for those who understand the cycles, it's not the end. It's simply the precursor to the next accumulation phase, where the entire process begins again. Understanding these 4 stages: accumulation, markup, distribution, and markdowns, your superpower. It allows you to detach your emotions and see the market for what it is, a predictable pattern of human psychology. Instead of buying at the top with the crowd, you'll have the confidence to start building your position when there's blood in the streets. Instead of selling at the bottom in a panic, you'll know when to take profits while everyone else is still celebrating. This isn't just theory. It's a practical roadmap that repeats itself over and over again. By mastering this, You transform from a pawn in the market's game to a player who knows the rules. If this clicked for you, hit that like button and subscribe for more deep dives into building real crypto wealth. Thanks for watching.